Jerome Powell on a second day, of course, once again pushing back against inflation as a concern right now, talking about those expectations maybe of higher inflation or higher Treasury yields being driven maybe for the right reasons, by growth expectations, by recovery from the global pandemic. And that seems to be a narrative that the markets today are buying into, because we see Asian equity markets in fine form, in real contrast to yesterday, so really bouncing back in Asia, up by 1.5%. European equity markets then opening to the upside. We see the FTSE 100 up by 0.5%. We see the IBEX over in Spain up by 0.8%. So we do see some broad strength coming through on these European equity markets. Do keep an eye on what's going on futures, though, over in the United States, as yes, they're positive, but not by an enormous amount. Interesting to see the way that we are selling, continue to sell bonds. So today looks very different to yesterday. Both days we saw selling of bonds and we saw rising yields, but now we seem to be able to sell bonds and buy stocks. We seem comfortable, investors seem comfortable with that kind of picture, and we see that very clearly coming through on the screen this morning. A little bit of upside for the euro and the pound as well. Now, Standard Chartered has warned the pandemic and low interest rates will weigh on earnings this year. The London-based bank says it sees little growth before a recovery in 2022. Hit by restructuring charges, adjusted pre-tax profits slid 40% in 2020, coming in shy of analyst estimates. We spoke to the lender's CFO, Andy Halford.
What we are seeing, and we have seen over the last year, notwithstanding everything that's been going on in the COVID space, is good balance sheet growth. So we grew mid-single digits of balance sheet last year, and we think we will grow similar this year, and we can grow similar after 22. The reason why 2021 will be flat is because the interest rate reductions that occurred partway through last year will have a roll-through effect over the balance of this year. So the underlying growth is there. It's just the sort of correction of interest rates that will cause the top line to be flat. What we are seeing is the Northern Asia markets being the strongest, and that is well over half our business is based in that part of the world. So we are fortunate in terms of our positioning there. We're seeing Southern Asia a little bit softer, but I think tentatively moving forwards. And then the African and Middle Eastern markets probably a step behind those. So we are actually quite well spread across various parts of the world that are growing. The growth is there, the interest rate holds us back for a year, but after 21, then essentially interest rates normalised and we're back to the normal levels of growth that we saw before COVID.
Andy, in recent months, you resumed hundreds of job cuts. You continue to look for savings. What is going to be the cost savings narrative for 2021? Where are you going to be looking?
So, as with many businesses, we are having to look very, very closely at our efficiency. We're looking very, very closely at areas that have been changing, enhanced probably by COVID. So, a lot of digitalisation and a lot of investment that we've put in over the last several years to get the business more digital, to make us more sort of technology capable. We have said that for 2021, we expect our costs to be no more than $10 billion. That is a level that we have been at for 2 or 3 years now. In fact, in 2020, we're slightly below that. But this is constantly one of investing into new technologies to get the efficiency so that when the top line does pick up, we have got a great engine sitting underneath it to power us forwards.
It's never a financial interview without a little bit of Bitcoin, Andy, so you're not going to escape. Where are you and the team on Bitcoin when you look at it? How will you participate in Bitcoin and cryptocurrencies, if at all, this year?
So we have been investing selectively in some blockchain technologies and some crypto businesses. We are clear that the technology has a really interesting future. But as we all know, there are sort of issues that go with it in terms of sort of trustworthiness and the sort of things that actually, when you're dealing with money, are really, really important to people. So we're essentially sort of hedging bets, as it were. We are playing in that space. We will see where it goes to. And if it does take off in a bigger way, we're well positioned to do that. But I think this is one which is on a sort of slow burn for reasons which are pretty apparent.
That was Andy Halford, Standard Chartered's CFO, speaking to us a little bit earlier. Shares in Standard Chartered open in London down by 2.5%. Now, it's been a bumper earnings season for the mining sector, and Anglo American is the latest to beat estimates. A commodity rally helped balance out another difficult year for its diamond business and a collapse in coal profits. The recent surge in metal prices has stoked fresh speculation about a new commodities super cycle driven by tight supplies and strong demand as the world moves to decarbonise. Joining us now, I'm pleased to say, is Mark Cutifani, Anglo American's CEO. Mark, thanks very much for talking to us here at Bloomberg TV this morning. Looking at the results there, you've come in ahead of estimates despite that tough time in coal and for the diamonds part of the business. What is it that's allowed you to perform so well?
Well, firstly, thanks for the opportunity. I think the main things that we can control, particularly in the second half, which are costs, recovery in production post the original COVID shutdowns, and prices have all combined to give us our best 6 months in 10 years. So a mix of things we can control and things that we can take advantage of.
And thinking about those prices, do you think there's a lot of talk in the markets right now, as you'll be aware, Mark, about whether we are at the foothills of a commodities super cycle, whether that is something that we are going to see? Is that something you spend time at Anglo American thinking about?
Well, in my role, yeah, all the time. I think the key things to focus on, firstly, with governments investing and in some cases pump priming economies with COVID, and spending in infrastructure. Coal, iron ore will probably enjoy that for some time, but longer term, the big winners will be copper, nickel, PGMs with the hydrogen economy. The new developments and the big changes in our economy will require metals to feed them, and we also think diamonds will do very well because of the interest and the lack of broader supply. So we think demand pretty good, and we think supply constrained as the miners haven't been probably spending enough money in new developments. So those conditions usually combine to give us pretty solid commodity prices. But for us, keeping our feet on the ground, keeping our costs under control, making sure we have our discipline around capital, all key to making sure we deliver the right outcomes in this type of environment.
Mark, unlike some of your rivals, you've got some pretty major projects underway at the moment. I'm thinking about copper mines in Peru. I'm thinking of potash mines in the UK. Do these rising prices give you scope to do more, or are you fully stretched?
Well, we've certainly anticipated what we're seeing today, so we're pleased that we've picked it, and we're probably 3 or 4 years ahead of most in the metals area, PGMs, copper, as you said, with the development of Quellaveco, and that's looking very good. We actually are not in potash. We've got what we call a polyhalite deposit that has potassium, but it's got 3 other nutrients as well. So we think it's a really differentiated type of project and feed for the agricultural sector, which we think has got significant advantages over some of those big potash projects you're hearing about. So we think we're in a very good position in terms of where the world is and where we think it's going.
You talked a little about some of the factors that might send metals prices higher, Mark, and we know on the supply side and on the demand side that there might be reasons to think about that, and the stimulus, what the stimulus is doing in various parts of the world. How tight is the copper market at this point? What do you see as you look ahead?
Well, I think supply and demand is pretty well balanced. But if you look at growing demand 3 to 5% looking forward, and the ability of the industry to deliver into that demand, particularly if the electrification technologies are driven as hard as we think they'll be driven, I think the world will struggle to fill that demand. We'll certainly do our bit to be delivering copper into that demand, but it's copper, it's nickel, it's PGMs as well. We've seen big set of operations overnight announced some problems in Russia. So the supply side's getting tighter by the day.
In terms of other markets, thinking about markets that you're maybe getting out of, or certainly thermal coal, we've heard about your plans to get out of the South African business there. What about the Colombian coal mines?
Look, we're a partner in Cerrejón with two other major players, guys that we respect. And we'd expect to manage an exit in the next 2 to 3 years. But again, the exact timing of that also depends on what the other two players may or may not want to do in the thermal coal space. I think over the next 12 months, both of them will probably determine what direction they want to take. And I think with that, we'll be able to come to an agreement on a three-way basis. So we're hopeful we'll be done within 2 to 3 years.
As the ESG and the green agenda ramps up, Mark, and we hear more and more about that, of course, perhaps it becomes more difficult to hand off, to sell off thermal coal businesses. Does that mean that you should be starting to think about an exit from other parts of the coal industry, coking coal, for example?
Well, on the thermal coal side, we've had a lot of interest around the thermal coal assets. And don't forget, in certain parts of the world...
Morning, everybody. I hope you had a good evening yesterday. Time to sell short British pound. I'm looking to sell short at, sorry, it's moved up rapidly, so I'm talking too much here. Let's wait a little bit because broker didn't let me to place in order to sell short. Let's see what's going to happen after this candlestick. What next candlestick will show us? This is based on that information. I'm going to decide if it was or not. Still waiting, so I'll speak to you later, guys, when the momentum will change for British pound. I'll speak to you later.
Products, it's done the right way, but we're certainly not thinking that way today. The steel industry needs coal, will need it for certainly beyond 20 years. And so how do we make sure we're a responsible player and contributor in that market, given there are no other alternatives? That's the thing that's exercising our minds in terms of doing it the right way.
Mark, thanks very much for your time. Good to speak to you. Mark Cutifani, Anglo American's CEO. Coming up on the programme, we'll stick to the earnings story. Telefonica climbs after cutting its dividend for the first time in 5 years to preserve cash. We'll speak exclusively to the company's CEO. That's next. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
Back to the European market open. 15 minutes into our trading session, and European equity markets making some modest gains today. Some further enthusiasm for the reopening trades. Part of the story, some commodities names doing well as well. Let's get the stocks that we've kept in focus this morning and the ones that are on the move. Danny Berger has those for us. Danny.
It might be green on the wider index, but I have some of our stocks that are declining today, one of them being Standard Chartered after falling in the Hong Kong session as well. Standard Chartered saying it is a difficult environment for 2021. They're really blaming here the low interest rate environment for why the growth in the income growth isn't looking as some investors would want. So shares falling more than 3.5%. One of the other big movers to the downside today, falling even more, is AB InBev. Now, they had projected a recovery for earnings in 2021. So the reason we're seeing these sell off more than 5.5% all has to do with margins. That's at least according to analysts who say that the margin pressure looks very strong when it comes to higher commodity costs and just the increased cost of having to ship up your beer and send it to people at home rather than in a restaurant. Finally, though, one of the biggest gainers on the stock 600, it's all about Reddit. Nokia gaining today more than 5%. We've seen a lot of those Reddit-fueled trades do very well. GameStop surging in aftermarket trading and during the normal session. Well, Nokia is also one of those stocks frequently messaged about on those boards. So that also rising during today's trading, Anna.
Thanks very much, Danny Berger, with the latest on some of those key movers. Now, Telefonica is gaining this morning, another key mover after slashing its dividend for the first time since 2016. That's as the telecoms company looks to preserve cash so it can cut debt. That's expected to fall further in the coming months. Telefonica recently sold wireless mast assets to American Tower. Phone companies have been reluctant to lose control of their tower assets, but there's been a recent surge in activity as telecoms have looked to reduce costs and raise cash. Joining us now, I'm pleased to say, Telefonica's CEO and Chairman, Jose Maria Alvarez Payate. Very good to speak to you then, sir, this morning. I wonder if you could tell me a bit about this dividend decision. Investors seem happy with a cut in dividends, which is a slightly strange situation. Why did you decide to cut the dividend?
Good morning, Anna, and thanks for having me here. First of all, year 2020 has been very challenging, and we have been evolving in the transformation of the company. 2021 is going to go the same. We'll keep transforming the company, therefore we'll keep investing in deploying our ultra broadband networks. We'll be closing some of the transactions that we announced a year ago, like the merger in the UK, or precisely the divestment in Telxius, the tower company, or the acquisition of the mobile assets of Oi in Brazil. And therefore, considering also the uncertainty around COVID evolution during 2021, we thought it was prudent to adapt our dividend policy to the investment needs of the company. On top of that, remember that this year we'll have probably 3 spectrum auctions in 3 of our main markets, Spain, the UK, and Brazil. Therefore, we thought it was prudent, but on top of that, it allows us to preserve a very sound remuneration policy for our shareholders. 30 cents of a euro implies a very attractive yield.
And as you point out, Jose Maria, you've been very busy doing a lot of deals. You've been very active when it comes to large transactions. Are you done now? Is that it? Have you restructured Telefonica to your liking?
The answer is no. We keep going. I mean, this is a transformation process in order to become a much more technological-oriented company. And therefore, we will need to reallocate capital. That's what we have been doing during 2020. Remember that the merger in the UK creates ultra broadband champion in the UK. The combination with the mobile assets of Oi will create a further enhance of our leadership in the Brazilian market. We have launched the 5G network in Spain last year, and in less than 3 months, we covered 80% of the territory. So there is a lot of things to do, and we'll keep going into that direction. So you should expect from us to keep going into this transformation journey.
So you carry on the transformations. I mean, telecoms infrastructure seems to be all the rage with investors right now. I know that you've been selling your towers unit. There's been plenty of other activity in this space. Has the sector peaked, though, or do we expect to still see further deals on infrastructure?
I guess yes. And the answer is precisely the pandemic has accelerated digitalization. Data volumes that are being carried through our networks are growing 50 to 60% every year. And that means that the usage of our infrastructure is very high. And that makes it very attractive for investors to leverage on that kind of infrastructure. So reallocating capex from traditional legacy infrastructure into the brand new networks like fiber is essential. So it's not just towers, it's data centers, it's fiber. We are one of the largest owner of a fiber network in Europe. There is more fiber in Spain than in the sum of the UK, Germany, Italy, and France together. So we have a lot of infrastructure that is very attractive, and it's totally hidden in the value of the telecom sector. So I guess that you should be expecting more and more deals because it's very attractive for investors, but also it's very attractive for us at the time of deploying capital. We have launched an alliance with Allianz in Germany to create an ultra broadband company there, and we are on the way of announcing something similar in Brazil. So yes, there is more to come, certainly more to come.
Okay, so releasing the value of those assets trapped within telecom sounds really interesting. In October, you mentioned that you'd had approaches from investors to acquire stakes in your tech unit. I wonder if you can tell us more about that situation. When will we see a deal there?
Well, first, we needed to make sure that we have Telefónica Tech ready. And it took us a while to spin off the assets and the teams and the products from the traditional telecom operators. That has been done. And therefore, now we are in the way of proving to the market that there is a significant value in that unit. Remember that Telefónica Tech revenues are growing double-digit in the middle of the pandemic. And I'm talking about cloud, cybersecurity, Internet of Things, or big data. So what you should expect from us to make it clear to investors that there is significant value in that unit, and if needed, or if attractive for us, we can reallocate capital by attracting some investors. But for the time being, what we are doing is making it clear to the market that there is significant value in Telefónica Tech.
Okay, and do you have any sense of when a deal might come through and with what kind of investor?
Too soon to say, but working on that.
Okay, thank you so much for joining us. Really good to speak to you. Jose Maria Alvarez Payate, Telefónica's CEO, thank you very much for joining us. Coming up on the program, the WTO's incoming Director General says the trade organization's paralyzed dispute resolution system must be reformed. But it won't be easy. More from our exclusive conversation with Ngozi Okonjo-Iweala. That's next. This is Bloomberg.
let's just start with the numbers.
And it would be essentially free cash flow positive in 2021. That was sooner than people had been expecting.
We have pretty good numbers here in the biggest divisions of Morgan Stanley. They are firing on all cylinders.
We've had this huge rivalry historically between Morgan Stanley and Goldman Sachs.
There are 24 reasons for Mr. Diamond to celebrate today.
As much as people may want to focus on trading, for Bank of America, it's all about credit.
It seems the markets are very happy with Trump. They're very happy with Biden.
Welcome back to the European market open. 25 minutes into a trading session that shows European equity markets moving to the upside. We do see some deterioration in NASDAQ futures, though, so keep an eye on that. Elsewhere, Dow futures point to the upside. NASDAQ underperforming. That has been the story of the week, really. For much of it, we have seen tech stocks under pressure from those rising interest rates in the US, from rising Treasury yields, and that remains the case today. So Treasury yields at 1.42. That is the handle we have right now. On the GRR, then, we'll just show you where we are on the sector breakdown, because this tells you a lot about the earnings story we've had today. Basic Resources, very much the standout performer this morning, up by 1.4% or so this morning. And Anglo-American, we spoke to the CEO, Mark Cutifani, certainly spends a lot of time thinking about whether we are in a commodity super cycle. And we do see that share price moving to the upside, up by 4%. But it's broader than just miners. It's broader than just London. We see gains elsewhere as well. Spain being lifted by the Telefonica share price, up by 4.7%. And telecoms is the second best performing sector on the GRR today. You can see some more defensive names to the downside. So it is a bit of a risk-on session here in Europe. Coming up, we speak to the head of funding and debt management at the Spanish Treasury, Pablo de Ramon Laca. We'll speak to him about the stimulus plan that the government is preparing, the state of the economy and the outlook for a rebound. Does Europe generally need to do more on fiscal stimulus to keep up with the plans, at least, for $1.9 trillion in the United States? That Spanish conversation next. This is Bloomberg.
What's the biggest mistake you made when you were a fresh MBA grad and looking for a job?
Make sure you try to do something that you're interested in and that you think you'll be good at. I just was on a path to law school, and I actually never asked myself why I wanted to go to law school. And I randomly went to an investment banking analyst recruiting event, and I figured out I had an aptitude for it. I was interested in the work. If you're not interested in it, and it's not something you're good at, the money will not justify it. I also think that there's nothing wrong with experimenting. Doing something that you always thought you might want to do, trying it for a couple of years, you can then go back down a traditional path if that's what you want to do. Try to remember what you want out of a job, where you want to live, what you want to get from it, from personal experiences, from development, from training, from fulfillment, from engagement in the community, and make sure you think about those things up front as you're recruiting and not try to evaluate it after you got there.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the European Market Open. 30 minutes into the European trading day that seems to be coping with a higher yield environment a little better today than it has in recent days. We see European equity markets, just as we saw Asian equity markets, focus on the recovery, focus on the growth expectations, rather than concerns around inflation and concerns around higher Treasury yields. Talking of which, I should just mention what's going on in the Treasuries market. In terms of the yield, we're at 1.42%. That is the handle on the US 10-year. When we look at real rates, we're also seeing movement to the upside there. So I just see on my Bloomberg now, the US 10-year real rate rises to the highest since July. So it isn't just the nominal rates, but also real rates, if you strip out inflation, also moving to the upside. That's a quick look at where we are on these markets then. Let's turn our attention to Spain, and the government will approve an 11 billion euro package to support struggling companies and self-employed workers. Speaking in Parliament this week, Prime Minister Pedro Sanchez said the aid programme will be geared toward the tourism sector, restaurants and bars and other small businesses. Joining us now, Maria Tadeo, our reporter in Brussels, who's standing by with a guest. Maria.
Yes, good morning, Anna. We're joined by the Director General of the Spanish Treasury, that is Pablo de Ramon Laca, who's joining us from Madrid. And sir, thank you so much for being with us. I want to pick up on that point that Anna was making. Of course, yesterday, the Spanish government announced that it will put another 11 billion euros to work to help sectors badly hit by coronavirus. So I wonder, how are you going to fund this, and how does it change or perhaps your funding needs for 2021?
Thank you very much, Maria. In January, we announced a target of 100 billion euros in net terms, less than last year. This implies just over 289 billion in gross terms, and we've already done 58 billion, roughly 20%. So we're firmly ahead of schedule. In a crisis like this one, yearly funding plans are a moving target. Issuance targets may be revised through the year in line with the evolution of the worldwide pandemic, progress in vaccinations, economic policy, implementation of the EU's next generation plan, and yes, new spending new spending announcements, right? So flexibility is key, but the Treasury is always very, very prudent in its estimates. So it doesn't change much in the grand scheme of things. The Treasury's financing conditions so far have been excellent, even if we have to adapt to market conditions. On average, our cost of funding so far this year has been negative. The average cost of outstanding debt continues to fall, and the average maturity of our debt has topped 8 years for the first time ever. And our recent syndication of a 50-year bond, let me remind you that this is a bond that ECB isn't allowed to buy, had 65 billion euros of demand. So our market access is excellent, and we can cope with anything that comes our way.
Right, and you make it clear that you do have to be flexible, and you also make it clear that financing conditions have been good for Spain. But I do wonder, when you look at 2021 and the issuance that you'll need, how are you thinking about structuring that? Because there's a lot of talk in the market about potential new syndications in Spain. You know, there's a lot of speculation about a new 15-year, about a new 20-year. So how is that looking?
Well, we've already done a 10 and a 50-year, both very, very successfully, normally in a year, we do around 4 syndications to put new points in the yield curve. This year, shouldn't be any different. You can expect several more references in the 10-year, in the 15, probably in the 20, in the 30, and we've already done the 50. So we can't announce anything yet, but we have plenty of options in the nominal and in the linker space. And of course, this year we are launching our inaugural green bond.
Right, and I want to pick up on that point because based on what I understand, you're saying there will be more syndications. There's also more linkers to the market. I know you can't be specific on the numbers, but that's the message that you're sending. And also on that green bond, when is that going to come? I know that you were supposed to put it in 2020. That got pulled, and then this is a year in which you say you want to tap the green market. So how is that going to be structured?
Last year, we announced our inaugural green bond in January 2020. Then the pandemic happened, the confinement and the crisis, and the government decided to roll over the previous budget and concentrate on the 2021 budget. So this year, for the first time since 2016, we have a full year budget as from January the 1st. So now is the chance to let investors participate in the Spanish government's environmental investment policy. So we have announced that we will do it this time in 2021 because we have a budget. And now we are working very hard with the different ministries in order to present the green bond framework, which is to let investors know how their money will be put to work and how we will report on the impact of their investments. So this takes a fair amount of time because investors are rightly very demanding of green bond issuers. But we have announced that we will be able to do it in the second half of this year. So stay tuned.
Okay. So that's the second half of the year. Okay. And Pablo, just a very final question, since we're running out of time. There's been a lot of comparisons between Spain and Italy. That spread has narrowed. Is that a fair comparison? Would you see or say there's any issues with perhaps another strong issuer in the periphery coming into the market? Do you see any tension between the two of them?
I would say that a narrower spread in Italy is great news for the euro, and it is therefore great news for Spain. When they buy a Spanish government bond, investors are buying into three things: the liquidity of Spain's bond market, Spain's growth prospects, and the future of the Eurozone, of which Spain is roughly 18%. As I said, the Treasury's financing conditions so far have been excellent. Our cost of funding this year so far has been negative. Our total cost of total debt outstanding is falling, and our average life is higher than it's ever been. So our debt is becoming more and more sustainable. So this time we have the opportunity to concentrate, issue cheap debt in order to grow. And we have everything that's necessary now to grow strongly out of this crisis. We have the will to grow with a budget approved and reformed underway. We have the means to grow with strong funding from Next Gen EU on its way as well. We have the opportunity to grow as the vaccination programs advance. And of course, now we have a plan, which we will present publicly before the end of the quarter and begin procurement and implementation into the rest of the year.
And we'll be waiting for it by the end of April. That's the key plan for the recovery plan, which you made there. Pablo de Ramon Laca, thank you so much for joining us. That's the head of the Spanish, Director General for the Spanish Treasury, joining us from Madrid ahead of the that recovery plan, which, as he says, will have to be presented before the end of April. Anna?
Maria, thanks very much. Maria Tadeo bringing us that really interesting interview from Brussels and Madrid. Thanks also to Pablo de Ramon Laca, then from the Spanish Treasury. Really good to get expectations for the issuance schedule for those green bonds in the second half of this year. Now, the World Trade Organization's incoming Director General says its paralyzed dispute resolution system must be reformed, but it won't be easy. Speaking exclusively to Bloomberg, Ngozi Okonjo-Iweala said she's looking forward to working with the Biden administration on reform the organization.
Back in the old days, I should say, countries used to go to war over trade. And trade is so important now, 60% of global GDP. So,
okay, guys, ladies and gentlemen, if you're looking to sell short British pound, if you're up to it, it's time. We have an order. And I want to place an order to sell short at 141.53. Okay. wow, it moved down really, really rapidly. Let's see what's happened after this candlestick. If it will move lower, I would have to cancel this order. This is the second time I'm trying to sell short British pound, and today, let's see what volume, moving kind of rapidly. Let's see if I will be lucky to get filled. If you're up to, like I said, this is the price we're looking to sell. Our indicators told us that good price to sell short. So follow my trades, and then you will see. We'll wait. I'll let you know when will be time to sell your profit. Okay, I'll speak to you later, guys.
And the WTO needs to be reformed and rebranded. It needs to have some successes because it's been stagnant and paralyzed for some time. And so if we can do these reforms, this will change the WTO. And I believe the US wants that. Look, the WTO has a secretariat with excellent, talented staff. There are many ambassadors there who are doing good negotiations, and we need to make sure they have some success in that.
So where do you see commonality in order to actually reform the WTO? I know you spoke to a number of trade ministers this week. What did they tell you?
There's a very great desire to reform the dispute settlement system with the appellate body. And of course, I know the Biden administration still has issues with it, as previous administrations. And there are some valid criticisms of the way the body functions. All the trade ministers I spoke to, and they're all desirous, and the ambassadors as well as the leaders, to see a good reform of this system. So I think we can all come around that. Will it be easy? The answer is no. Because if it were easy, it would have been done. But I think we can put together an approach and a work program that can bring everyone.
Sorry, guys, you need to cancel this order. Second time, it moved again down and momentum changed, direction changed. So the order to sell British pound cancelled. And please cancel as well. We'll see when the time will be right to trade the pair. I'll let you know.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
Maybe even in some ways a conservative assumption. But if it's optimistic, we can delay it and push it out. If it's conservative, we can bring it forward. But it's there to give our people some certainty.
We finished the fourth quarter in the mid-30s in terms of global occupancy. That recovery is being led principally by the leisure segment, but we are seeing some encouraging green shoots in business transient. I think many of us look with optimism at the way we've seen the recovery unfold in China.
Some of the voices from the leisure sector, the CEOs of Qantas Airways and Marriott International, Alan Joyce and Tony Capuano, respectively. Now, travel and leisure stocks have seen a boost this week from vaccine and reopening optimism. Kicking off in Europe, it's followed through to US sectors too, with hoteliers and airlines popping higher. You can see some of the one-week performance there on your screens. Some of these stocks up by more than 25% in just this week. While the reopening offers hope to millions stuck at home, the pandemic hasn't stopped the world's wealthy from flying. Instead, they have been increasingly choosing to go private, one of the few travel categories to have held up during the coronavirus crisis. Private flying has offered rich people the opportunity to jet off while minimizing potentially risky contact with other passengers. Joining us now is Emily Williams, co-founder of I&W Private Aviation. Emily, good to speak to you. So if I understand correctly, you negotiate bespoke contracts with flight operators. There are many in the market, and so you work with them to negotiate these contracts. So what have you seen in 2020 in terms of a drop off in some business travel, I suppose, in the private jet sector, but then a lot more appetite from those in the leisure sector who had the money to trade up?
Indeed. Yeah, we advise across a wide range of solutions. So we've got a kind of unique view in the market across both ad hoc charter, which has only really seen an 11% drop year on year, which I think is quite remarkable in this pandemic, across when you look versus commercial travel, which has seen kind of an over 50% drop. It's true that clients are looking to fly privately with health anxiety, health security and safety, wanting to be traveling within their own bubble. But I think also the private jet and the charter aviation sector has made a good contribution over the course of the pandemic. They've also been moving vaccines. There's been a lot of repatriation flights and medical flights. I think the outlook is positive. I don't want to be too bullish about it, but certainly for our business, we had a 15% growth in 2020 versus 2019. I think a lot of people are looking to private to plan for the future. So although they may not be flying now, they're certainly trying to assess their options going forward. And they're absolutely, those who are flying privately are looking to make a bigger investment in their private travel. The long-haul flights that they might have done commercially in the past, they're now starting to review that over the next course of the year and while the vaccine programs roll out. I think also within that picture, there's been a lot of differences in different regions. The US has stayed fairly steady. There's a lot of intra-US travel. The UK has been hit particularly hard, and they're down about 60% in terms of private aviation movements year on year. A lot of that being due to the pandemic and the closed borders, but also Brexit has led to additional challenges.
Okay, yes, and when it comes to crossing borders. Let me ask you about business travel then, because obviously you can see reasons why people who feel they really must travel have wanted to go private by private jet rather than commercial. But if you can decide not to travel at all and just do things via technology options, of which we've become very used in 2020, you might choose to do that. So do you think that business travelers will return to private jets in as high numbers as we saw them in years gone by?
So the US has already starting to see that growth, particularly on the East Coast. They're starting to see business travel pick up. And it's absolutely been a kind of acceptable form of travel in the US for a long time. I think in Europe it's going to be a lot slower, and that's really because we're flying across different borders and different countries. A lot of our clients, businesses, venture capital firms, private equity firms, who like to see sites and see the businesses they're investing, have asked us to plan for 2021 as if it was 2019. We're not seeing that travel yet, but we're certainly starting to plan for it. So I am hopeful that we'll see a return to business travel. At the moment, the majority of the travel is certainly for leisure, and where allowed, obviously. Regulations and restrictions are tough, and they're being enforced actively at the moment. So leisure is definitely the primary travel mode at the moment, but we are absolutely starting to see the business being planned, but not yet executed.
Is it an operator's market in terms of the pricing that operators are able to achieve, Emily, when it comes to leisure travel? Because those who travel now and choose to go privately obviously really want to travel.
Absolutely. So I think there's two sides to this. Operators are also keen to keep their aircraft flying. They want to keep their crew in the air, keep them current. So they do want to price keenly to win that business because travel is not happening as much as it was. Also, aircraft aren't moving around as much. So if you imagine an aircraft, a private jet, has a home base where it is based most of the time, and it has to fly to pick up people and bring them back. When we're at sort of normal levels of flying, those aircraft are based all over and often only have to do a small empty leg sector to pick up a client. But right now, they're probably doing quite a long route. So actually, I think it's sort of shifted the other way. Prices are keen. Operators are keen to win trips. They're by no means slashing prices, but I think that the margins are lower than there might be in other times.
Emily, interesting. Thank you very much. Thanks for joining us. Emily Williams, INW Private Aviation co-founder. Coming up on the program, Anglo-American soars as profit remains steady after the commodity rally helps balance out another difficult year for some parts of the mining business. We'll get more insight into the commodities market with Eddie van der Walt, our Markets Live editor, who's up with us next. This is Bloomberg.
It's extremely exciting for the university, for being a historically black college and university. It's just exciting for our engineers to actually be allowed to work for a large firm such as Boeing with such technologies that we can see the outcome.
Never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lines in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
supply and demand is pretty well balanced. But if you look at growing demand 3 to 5% looking forward, and the ability of the industry to deliver into that demand, particularly if the electrification technologies are driven as hard as we think they'll be driven, I think the world will struggle to fill that demand.
Mark Cutifani, Anglo-American CEO, speaking to us earlier this hour, talking about his expectations around commodities and in particular around the transition of the economy away from fossil fuels to other forms of transport, all of that set to boost things for some commodities at least. Let's talk about those commodities now with Eddie van der Veld from our Markets Live team, who's with us this morning. Eddie, good morning to you once again. It seems like not a day goes by when I don't come into to work and see another headline about just how strong the metals market is. What are you seeing?
Yeah, and I think look, the narrative that we're entering a super cycle, particularly for the metals, has taken hold in these markets. People are getting really excited about this narrative, and there's a lot to get excited about. I mean, this is all about the EV trade, don't forget. So if you're bullish on Tesla at any price level, then certainly you have to be bullish on copper as well.
Right, yes, indeed, it's about the EV trade. Interesting you used the label, the super cycle. I spoke to Schroders earlier on, and Joanna Kirkland said, she wasn't sure if it was a super cycle in commodities, but she said, I don't need to believe it is to invest in them, and she is invested in them, which I thought was an interesting take. Elsewhere in your world, Eddie, Bitcoin on the move once again. A lot of excitement when we got to the 50,000 mark. What's latest in the story?
Yeah, we're struggling to hold above the 50,000 for Bitcoin. Look, Bitcoin has had a breakneck rally. It's had a little bit of a pullback this week, but it's still up something like 800% from the March lows. So I think there will have been some people that have taken profit here, but the wind doesn't feel like it's completely gone out of this rally just yet.
So the wind's not gone out of that rally. What about the stocks rally we're seeing today? It seems interesting that we heard very similar messages from Powell on day one and Powell on day two. The first day, the market got kind of stressed by the prospect of higher treasury yields still to come and decided to sell stocks. And then on day two, took a different approach. And now we seem happy to ditch bonds and buy stocks. What do you make of all of that?
Yeah, look, so equity's a little bit more chirpy today. You're right, the Stock 600 is up, and the FTSE is being boosted by the miners and so on. But the Powell commentary was a little bit more nuanced, I think. I mean, he did talk about some asset prices being, looking somewhat inflated at these levels, but he more or less said that that's not his concern. At some point, perhaps it does become his concern. And the other fact is, the steepening that we're seeing in the yield curve. The market has over and over led the Fed. So I think the Fed might be behind the curve.
Okay, all right, interesting stuff. Eddie van der Veld from our Markets Live team. Watch those NASDAQ futures. They are edging ever lower. Surveillance Early Edition is up next. This is Bloomberg.
Very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast, and it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being in almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
There's a lot of slack in the labor market and a long way to go to maximum employment.
The WTO needs to be reformed and rebranded. Will it be easy? The answer is no.
I'm directing senior officials in my administration to work with industrial leaders to identify solutions to this semiconductor shortfall.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Welcome to Bloomberg Surveillance Early Edition on this Thursday, the 25th of February. I'm Francine Lacqua in London, and here's what's coming up on today's program. Meme stock mania returns. GameStop shares jump 104% in Wednesday's cash session, dragging a host of other retail favorites higher. Powell sticks to the script. The Fed chair's pledge of prolonged support sees bond sell-off, stocks rally again. Commodities are set for their biggest monthly run in 4 decades. And family brand buyouts. LVMH-backed private equity firm L. Catterson is near a deal to buy Birkenstock for €4 billion. The Italian football sticker maker Panini is also considering a sale. Now, good morning. After disappearing from the headlines for a while, well, meme stock is back. During a flurry of late day buying activity, GameStop shares almost quadrupled. Now, nearly 24 hours earlier, GameStop has ousted its chief financial officer, seeking more of an online presence. Still, the Wednesday frenzy spread to the other day trader favorites, with stocks like AMC and COS also jumping during the trading session. Now, let's get to our top market story on this with our Danny Berger. Danny, I have to say, I was watching it last night. I mean, it was pretty incredible. It's like the meme stocks are back. Is it users getting in when they like something, or is it really a movement in group?
It does look like it has to be a movement in group at this point, because when you, as you say, Francine, as we were watching the stock yesterday, it was really just in the last 90 minutes of trading that we saw this huge surge in price. So when you see something like that, it's kind of hard to argue that it was reacting from the CFO leaving, which happened 24 hours earlier. In trying to say, okay, what spurred this? Why did all of a sudden Reddit traders get into this? The reasons out there are kind of strange at the moment. A couple people have been pointing to the fact that one activist investor in GameStop tweeted a picture of an ice cream cone from McDonald's and a frog emoji, and apparently there's some conspiracy theory that that means you should go buy GameStop. I'm not too sure about that one, but this is the point that we're in this market, Francine, where it's just sort of anything seems to be able to set off the retail trader buying frenzy, and then it spreads to these other stocks as well.
I mean, if I could speak in memes, I'd do the Italian gesture saying, what? If you look at GameStop at the moment, it's actually jumping some 74% in pre-market trade. Danny, I mean, is this just the new normal? Do we need to get used to it?
at least for the foreseeable future. I don't think this is going away, and trades like this just kind of really encourage people to continue to get back in, which of course can be dangerous. If you had a really leveraged GameStop bet, it fell. Do you look at the past couple hours of trading and say, okay, I need to get back in? We've seen Reddit, it crashed yesterday for about an hour as this was happening. Most of the trades on GameStop yesterday were just one share trade. So this all suggests, yes, the action is led by retail investors. And I think people continue having to grapple with this new reality, whether they like it or not. And Francine, there's a lot of people who don't like it.
Yeah, I have to say, Charlie Munger really went after Robinhood. I mean, he said this is basically gambling services and it's a dirty way to make money.
Yeah, it was really harsh words that he said. You know, if you're making money based on getting people to gamble, he says it's a bad way to make money. It's that quote you said about making dirty money, and I think it's crazy to allow it. He also said, I think all this activity is regrettable. I think civilization would do better without it. And he lumps in SPACs with the speculation going on in GameStop as well, just pointing to it as a sign of what he calls an irritating bubble. He also called commission-free trading one of the most disgusting lies by the investing world. So really coming out against it, of course, all these young Reddit traders just kind of brush that off. They're of course not listening to Charlie Munger, Francine.
Yeah, and of course, it's always better when you're making money. Danny, thank you so much. Danny Berger there with the very latest on GameStop. Now, joining us is Luke Hickmore, Aberdeen Standard Investments Director. Luke, I know we want to talk about reflation. We want to talk about bubbles and volatility. But first of all, you know, the meme stocks, the GameStops of this world, how does it translate into how you view the market or investments that you want to be involved in?
I suspect that if you're looking for a point where it might stop, I suspect that might come when people are back from lockdown and there's less day trading going on with the savings they've built up over the last year. But it also possibly reflects that this move we've seen over many years now of an increase in market share of passives, which leaves the marginal trader that much more impactful in terms of what happens and what goes on. And I wonder, you know, we've seen obviously the 140% short that was there in GameStop before Redditors started getting involved. But I wonder also if there is this element of savings getting used speculatively, but also the passive size of the passive involvement in markets makes a difference too. So that does make an impact to us because we want to buy stuff on fundamentals. We want to think about where they're going in the future, how they're going to make money. Does that benefit our investors? Something like GameStop, which goes from 15 to 400 to 100 to 150, you can't analyze that. It's worse than Bitcoin.
But I mean, it's certainly, you know, there's some tendency, I guess, where you're not really based on the fundamentals, Luke. Do you have a Reddit account? I mean, is it, you know, as an investor, do you need to just keep an eye on that thing, or do you have algorithms that do that for you?
I have a wife who looks at Reddit for me. He's very good at Reddit, and I'm not very good at Reddit. The interesting thing, we do look at the social media mentions for companies when we're thinking about investments. You know, quite often you do see this spike in social media just before an announcement or as an announcement's going on, which starts giving you a colour for how a broader society is taking a particular news flow. That could be quite important. But Reddit as a source of ideas and future thinking, I'm not sure that's particularly useful if it ends up with things like GameStop and the cinema chains and, you know, everything else that's impacted recently. That just feels like speculation to me.
Luke, thanks so much. Luke Hickmore of Aberdeen Standard Investments stays with us, and we'll go back to what we heard from Jay Powell. We'll go back to reflation and volatility next. Smart Conversations on Bloomberg Surveillance Early Edition. Later on in the program, we bring you my exclusive interview with the incoming WTO Director General, Ngozi Okonjo-Iweala.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
There's a very great desire to reform the dispute settlement system with the appellate body. And of course, I know the Biden administration still has issues with it, as previous administrations. And there are some valid criticisms of the way the body functions. All the trade ministers I spoke to, they're all desirous, and the ambassadors as well as the leaders.
Well, that was the World Trade Organization's incoming Director General, Ngozi Okonjo-Iweala. She says reforming the WTO's paralyzed dispute resolution system is a key priority, but it won't be easy. More from our exclusive interview a little bit later on in the program. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The COVID-19 vaccine from Pfizer and BioNTech has overwhelmingly effective in a study that followed nearly 1.2 million people in Israel. It cleared hurdles for stopping the spread of the disease and preventing symptoms and deaths. It was so effective that experts believe with broad enough use, it may be possible to halt the pandemic. Now, Chancellor of the Exchequer, Rishi Sunak, has been urged to deliver a £100 billion fiscal boost next week as part of the UK's budget. The Resolution Foundation think tank is calling for targeted stimulus on top of existing support. Bloomberg sources say the UK also plans to keep corporation tax competitive. That gives it scope to raise the rates, as the UK has already the lowest in the G7. And for about 4 hours yesterday, the Federal Reserve systems that execute millions of financial transactions every day were disrupted by an operational error. The systems were restored by the end of the day, but the outages raised questions about the resilience of critical infrastructure that underpins the global economy. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thank you so much, Leanne. Now, Fed Chair Jay Powell says it may take more than 3 years for the Fed to actually meet its 2% inflation goal. On day 2 of his testimony to Congress, he added that signs of prices rising won't necessarily lead to persistently higher inflation. Well, Powell also touched on asset prices, saying some of them are, quote, elevated by certain measures. Let's get back to Luke Higmore. He is Aberdeen Standard Investments Director. Luke, thank you so much for staying with us. What do you do with, if you look at the reflation trade, it's very clear that Jay Powell, for 2 days in a row, said, look, the market should not freak out. It'll take a long time for this economy to really recover and from price rises to translate into real higher inflation.
Yeah, and whereas I often feel uncomfortable agreeing with central bankers, I kind of do agree with Jay Powell. The the environment for inflation to take hold long term just doesn't seem to be there. If one of the things we talk about a lot, of course, is acceleration of trends that were there pre-COVID. Pre-COVID, you got a lot of growth and very little inflation. Now, I think we'll get a lot of growth in H1, and I think we will get actually inflation over target for the US in H1, but I don't think it lasts. The conditions aren't there yet. Unemployment's still very high, and people's expectations of future inflation haven't really changed. So I think, yes, we'll talk about inflation for a few months. As we get through the pandemic opening and through the early parts of that growth, I think that will fade. Now, what that means for yields, harder to say, but I think possibly 150 is as a short-term high for the US 10-year before people start factoring in that actually not everybody's going to spend their savings. All the fiscal push we're going to get from the US government won't make it through in terms of an inflationary impact. And we've still got structural issues to get through, like very poor productivity. So 150... let's see. The market's very good at proving you wrong very quickly, as you know. But that feels to us, Luke, that's a short-term high.
Yeah, so Luke, where do you want to be invested in exactly?
So for me, I like the idea of growth. I like the idea of economies opening up. We've been picking up assets in things like retail, where we see they've been beaten up really hard. And actually, one of the things you could see people doing as they get through the lockdown, particularly in the UK, is go shopping again. They love going to shops in the UK. And I think, if you're thinking about big shopping centres in the UK, they could bounce back really, really quickly. I think air travel, right from making the airframes to the airports to the airlines, all of that works. And we've got lots of assets across that space as people come back through, and holidays even. So, we bought some exposure through cruise lines last week, and we've also been picking up some exposure through holiday lets from some of the really big operators.
Luke.
So. Yeah, that
I mean,
works.
one of the things, I was reading the New York Times this morning, and they're talking about a new variant that's spreading quite rapidly in New York. If you buy, cruise ships, which I have to say is a pretty brave move, good valuation at the moment, is this to hold it for the next 2 to 3 years? Or, what kind of risk appetite do you have to make sure that you're not losing out?
So very few of our assets are for short term. They really are on a 2 to 3 year horizon for most of the things that we look at investing for our clients. The cruise thing, I think, yes, we're going to get variants. Yes, we're going to get mutations, and we're going to see vaccines coming along that help with that too. And we've seen a lot of evidence that the existing vaccines are pretty effective at stopping the rising deaths, if nothing else. So, the push to open up is going to be really, really strong. Let's hope the New York variant, or whatever we're going to end up calling it, doesn't turn into one similar to the we had in the UK. But even the UK one seems to be well under control now.
Luke, thanks so much. Luke Hickmore of Aberdeen Standard Investment stays with us, and we have a great volatility chart given some of the price action overall. Coming up, pockets of exuberance. JP Morgan says that the rally is only in its first innings and that any bubble-like behavior is likely to be isolated. We'll discuss that next. This is Bloomberg.
during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Francine Lacquet here in London. Now, global equity markets may just be points away from records, but JP Morgan doesn't see a broad bubble. Instead, strategists, including Joyce Chang, see pockets of the market which are seeing hypergrowth. Some sectors, they say, are still cheap. This is only the first inning of the market rally, and the rotation into cyclicals could play out for next year. Well, to talk about all of this is Luke Hickmore. He's Aberdeen Standard Investments, who's still with us. Luke, when you look at the market, is there anything that could be in bubble territory? I know you said you want to get ahead of the market when things reopen. So it's things like, airline travel that may be a good opportunity. What's completely being overbought?
So I think it may end up being tech. That's often been the graveyard of anybody's expectations. The run-up that we have seen in assets like Tesla and assets like Shopify just seems extraordinary compared to their future earnings potential. I mean, I was there during the tech bubble in 99-2000, and maybe it doesn't feel quite that bad, but we do need a rotation into value from those hyper-growth stocks. And actually, I think some of the cyclically exposed commodity miners have got way ahead of where growth could get to. That could also be starting to be in a bubble as well. Technically speaking, I guess some areas of the credit market are looking expensive. If we don't see continued support from central banks and demand from investors, the technical support that we have seen for the last year, we could see that ease off slightly. But, there is also plenty of other areas like the high yield part of credit, which I think is attractive. The areas that we were talking about just before the break that come out of the vaccine. I think there are plenty of areas where you can look at good returns going forward as well.
Well, this is also from JP Morgan, and basically they're talking about volatility, Luke. Given the VIX is at a near record premium to actual equity volatility, we think selling the VIX bubble represents a good market opportunity. Would you agree?
Trading volatility through something like the VIX is not an expertise of mine. What we do look at the VIX for is an indicator of the kind of volatility that you might see in the markets I operate in mostly, which is credit. Now, typically when the VIX is elevated, credit markets are widening. So, if they're seeing VIX coming down, that would be great for credit. It suggests that it tightens up again. However, it's so tight already, it's really difficult, I think, for that to happen. But up in this kind of late teens, early 20s in terms of VIX, usually it ends up seeing credit push wider. So it'll be interesting to see. I mean, if JP are right and that, we see a resumption of growth in the S&P and that brings the VIX down, that is pretty supportive for credit.
Look, is there something, do you break it down also in regions? So because Asia got, rid of COVID-19 quicker, especially I'm thinking about China, than other countries, do you see more opportunities there than the rest of the world? Or do you really look at asset classes and industry more than regions?
No, regions are important too. So, typically if you're thinking emerging markets, we would have gone to Latin America. More recently, we have indeed been going over to Asia. We've been looking at some of the kind of China housing stocks. We've been looking at some of the Macau gambling companies. And again, that's part of the exit from lockdown trade. And actually, Asia credit as a whole still got a pretty good yield. If you're thinking it's 3.5% in dollars, that's pretty attractive, even with the rising yield environment that we have seen. And as you say, China, the Chinese government bond market has been incredibly stable through this sell-off that we've seen in treasuries and Western market government yields. So yeah, it's an area we've been increasing for the last 3 months.
Is Europe being left behind because we're just not doing enough stimulus? And does that mean that you actually prefer U.S. assets in this kind of environment?
Yeah, if you can find them. Actually, UK, US, and I suppose it would be going along the lines of a kind of UK, Asia, then US for me in terms of the attractiveness of assets. I think you're right about Europe. It's problematic getting the kind of fiscal push they really need agreed across the continent with a burden sharing approach. That still seems to be problematic for them, and it will hold them back. And in the meantime, actually, what they have done in terms of supporting a lot of businesses during 2020 that really shouldn't have survived will come back and haunt them to a degree as they really struggle to get inflation off the ground over the next foreseeable future, I think, for Europe. So, yeah, for me, you know, some European assets will definitely do well, of course, as people get back out into the high street and back out into their normal lives. But as a broad-based recovery, it's harder to see in Europe for sure.
Thank you so much. Luke Hickmore, their Aberdeen Standard Investments Director. And of course, Luke was mentioning their UK assets. A lot of speculation here in the UK is what the Chancellor, Rishi Sunak, will announce at the budget next Wednesday. It's, of course, we're expecting some kind of corporation tax hikes, but then we also had a group today saying that the Chancellor should extend some of the COVID-19 programs. Now, coming up, Smart Conversations on Bloomberg Surveillance Early Edition. Up next, we'll bring you exclusive interview with the incoming WTO Director General, Ngozi Okonjo-Iweala.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Meme stock mania returns. GameStop shares jump 104% in Wednesday's cash session, dragging a host of other retail favorites higher. Joe Biden is concerned about the global chip shortage, while the U.S. president signs an executive order to ensure reliability. And there's a great desire to reform the WTO, but Ngozi Okonjo-Iweala tells us it will not be easy. More from our exclusive interview next. Well, good morning, everyone, and welcome to Bloomberg Surveillance, the early edition. I'm Francine Lacqua here in London. Now, the World Trade Organization's incoming Director General says its paralyzed dispute resolution system must be reformed, but it will not be easy. Well, I spoke exclusively to Ngozi Okonjo-Iweala last night, and she said she's looking forward to working with the Biden administration on reforming the organization.
Back in the old days, I should say, countries used to go to war over trade. And trade is so important now, 60% of global GDP. So we need to have a place where trade disputes between countries should be arbitrated, and that's the WTO. I think it's the one place in the world where countries can be together, come together to settle their disputes, so as to avoid trade wars. And we should then strengthen it and make better use of it.
So, Dr. Ngozi, how do you keep the U.S. engaged in the WTO without it becoming too political?
I believe that when I've listened to the priorities of the Biden-Harris administration, I believe that some of the priorities they have with respect to trade, trade should be about people, about better life for the middle class, for labor. It should be an instrument to help us avoid inequity within countries and between countries. I think some of these objectives are what the WTO was originally set up to focus on. So I think if we keep those objectives and purpose in mind, we can arrive at the method and the rules to make us deliver on those objectives. So I think I'm looking very much forward to working with the administration, the Biden administration, to try to reform the WTO. I know they're interested in reform, and the WTO needs to be reformed and rebranded. It needs to have some successes because it's been stagnant and paralyzed for some time. And so if we can do these reforms, this will change the WTO, and I believe the U.S. wants that. Look, the WTO has a secretariat with excellent, talented staff. Mm-hmm. There are many ambassadors there who are doing good negotiations, and we need to make sure they have some success in that.
So where do you see commonality in order to actually reform the WTO? I know you spoke to a number of trade ministers this week. What did they tell you?
There's a very great desire to reform the dispute settlement system with the appellate body. And of course, I know the Biden administration still has issues with it, as previous administrations. And there are some valid criticisms of the way the body functions. All the trade ministers I spoke to, and they're all desirous, and the ambassadors as well as the leaders, to see a good reform of this system. So I think we can all come around that. Will it be easy? The answer is no, because if it were easy, it would have been done. But I think we can put together an approach and a work program that can bring everyone around the table.
Well, that was my conversation with the incoming Director General of the WTO, Ngozi Okonjo-Iweala. Now, Joe Biden takes action as a global chip shortage threatens U.S. growth. The U.S. president has signed an executive order to review supply chains at auto plants, but Biden himself has acknowledged the problem won't be solved immediately.
We need to make sure these supply chains are secure and reliable. I'm directing senior officials in my administration to work with industrial leaders to identify solutions to this semiconductor shortfall.
Now, to talk about this and to talk about the WTO is our Bloomberg Trading Tsar. He's Brendan Murray. Brendan, it's been too long. I know I call you all the time just to get information and to understand the global supply chains, but I'm delighted to have you on TV today. What exactly can Biden do at this? What is he worried about, and what can he actually do when it comes to chip shortages?
Well, there isn't a whole lot that he can do right away. Obviously, we're hearing a lot of echoes from the Trump administration that saw supply chains that were sprawled all around the world as a real sort of national security threat, in addition to an economic threat. So whether it's semiconductors or PPE, the way the world economy is wired right now is not in a way that can handle sort of sudden disruptions to demand or supply. So I think what you're seeing is Biden coming together, with a relatively bipartisan idea that we should be producing more critical goods closer to the U.S. And trying to capitalize on the way the pandemic has exposed those deficiencies. I should note that there are European countries that are looking at the same kinds of things. So this isn't unique to the U.S., but definitely some of those sprawling supply chains are coming under a more intense scrutiny now.
Brendan, what does this mean in terms of U.S.-China relations? So, we also had an extensive interview with the incoming Director General of the World Trade Organization. She was very careful in not trying to play also, the WTO in terms of this U.S. versus China trade that we've seen over the last couple of years. But does chip shortage, go to tensions there?
Yeah, it definitely goes to tensions there, and it brings in the sort of politically sensitive issue of Taiwan, too, because Taiwan is a big semiconductor producer and exporter. So you have, geopolitical layers into this story as well. But I think, the main thing is that, and you don't have to listen to too many company earnings calls to figure out that reshoring and bringing production back home is something that sounds good, in sound bites from Washington, but when you actually look into what it takes to re-engineer those supply chains, undo decades of contracts and business relationships, it's a lot easier said than done.
Do we have any idea, Brendan, on how the Biden administration will deal with China? I keep on hearing, a lot of chief executives, often off the record, will say, I'm so glad it's not policy by tweet because we know where we stand. But could you see a Biden administration that's actually much tougher on China than Trump was?
You could see the toughness be exercised in a different way. The Trump administration, for all its kind of toughness, was on the trade side of things, playing defense, throwing up tariffs, saying we're going to make it tough for you to come into our market and penalize you that way. The way to another approach, which some people think you could see the Biden administration take, is a bit more an offensive approach, where you try to provide government incentives, research and development for sort of homegrown high-tech industries, rare earth kind of things, and of course teaming up with allies in Europe to kind of raise the pressure on China. So I think toughness, will continue, but maybe it'll look different in a more sort of offensive strategy as opposed to kind of playing defense with tariffs.
Thank you so much, Brendan Murray there. Our trade czar, he looks at supply chains. He looks, of course, at semiconductor. He looks at everything to do with trade. Now, coming up, the murky world of commodity trading. Well, the people who use their power over the world's resources for political influence. We talk to our chief energy correspondent, Javier Blas, about his new book. It's really a page-turner. It's called The World for Sale. That's coming up next, and this is Bloomberg.
technology landscape gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua here in London. So let's get straight to your Bloomberg Business Flash. Here's Leanne Gearns. Hi, Leanne.
Hi, Francine. Australia's passed a law forcing digital giants such as Facebook and Google to pay local publishers for news content. The two firms negotiated with the government and managed to extract some last-minute concessions. The move has been widely followed across the world by regulators grappling with how to deal with big tech. Warren Buffett's right-hand man, Charlie Munger, thinks brokers like Robinhood, who attract inexperienced retail investors, are essentially offering gambling services. The 97-year-old investor says a commission-free trading is a lie and the platforms have found a dirty way to make money. No response to the comments from Robinhood. And Standard Chartered is warning the pandemic and low interest rates will weigh on earnings this year. The emerging market-focused lender sees little growth before a recovery in 2022. The bank is returning to dividend payments and announcing a buyback. It expects about $500 million of restructuring charges over the next 2 years. And Credit Suisse is worried its workers are burning out as they enter a second year of largely working from home. The Swiss bank hopes to start bringing some employees back into the office soon, well, at least part-time. The head of the firm's trading and investment banking arm says there is only so many Zoom calls you can do. And that's your Bloomberg Business Flash. Francine.
Oh, Leanne, there are only so many Zoom calls you can do. I couldn't agree more. And there's only so many hours of homeschooling one can do as well. Now, the commodities hot streak is putting the asset class on course for its best run in over 4 decades. Our Markets Live managing editor, Mark Cudmore, says based on historical 10-month runs, that's bad news for stocks. In fact, in 1980 is the only time where an extreme commodity rally did not lead to double-digit declines in the S&P in the following year. Now, against this backdrop, our chief energy correspondent, Javier Blas, has written a new book about the murky world behind commodities trading. Now, alongside his co-author, Jack Farkey, Javier's book, The World for Sale, Money, Power, and the Traders Who Barter the Earth's Resources, lifts the lid on the role that these traders actually play in the global economy and how some individuals leveraged their position to wield political power on one of the wildest frontiers of capitalism. Well, Javier joins me now. First of all, Javier, so when I first started reporting, OPEC was my first job. And it's just such a secretive, crazy world to really try and understand all of the different dynamics. And you've been a reporter on this for like almost 2 decades before you've written the book. Did you learn anything, doing the research of the book that you didn't know before?
Absolutely. Thank you for having me. We learned quite a lot about the commodity traders over the last 2.5 years that we have been researching the book. It is a very secretive world, as you say. Many of the big commodity traders are privately owned companies that they don't have to disclose any financial information. But we got our hands on more or less all the major traders' accounts. So being able to go through their financials, see how much money they were making, particularly on those crazy years of the early part of the commodity super cycle in the early 2000s, which start to look very similar as today as prices go up. But the amount of money that these companies were making was wild.
Are these cowboys, Javier? I mean, do they have a political agenda, or are they just in it to make money?
They're in to make money. Their agenda is maximize profits, and they're very good at it. The commodity traders are a very rare bunch of personalities. They mix this kind of ruthlessness of pursuing profit about everything, but also mix with a bit of an old school charm, almost the kind of banking of the 50s and 60s, where personal relationships, where handshakes was everything that mattered. They don't seek to influence politics per se, but because in many countries, natural resources, money, and power go hand in hand, what they do have an impact in politics. But it is really, it is a business that is still run by the motto of my war is my bond, where lunches and dinners are absolutely essential, and where the individuals who work in this area are very hardworking. They travel 300 days a year, potentially not that much today. Probably they are doing the business through Zoom, but it's a very special area of the global economy.
Javier, who's the most colorful person that you've met in research? I mean, you knew all these guys anyway, because you always, give scoops and actually break news. So you know these people and you get them to talk to you. But who's the person that surprised you the most in all of this?
Well, obviously, Ivan Glasenberg is one of the most colorful characters of the industry. But to me, the very interesting times were to talk to some of the old hands of the business, people who were the Ivan Glasenbergs of the 60s and the 70s and 80s. And some of them, they are 90-year plus old, but they are sharp. Their mind is very focused, and they tell you the stories of dealing with Saudi Arabia during the oil embargo, or the very early days of commodity trading after the Second World War, where everything was done by telegram, and where traveling around the world was a bit of an adventure. I mean, traders sometimes, we interviewed one trader who was 93 years old now, and was telling us about leaving home for 3 months for a trip to Africa.
I mean, it's just amazing. Javier, you also, I mean, I have to say, the book is beautifully written. It's not too long, so I urge everyone to pick it up. But at some point, you also describe how the pension funds of, teachers in Pennsylvania helped fund the war in Iraq, or things like that. Like, some of these things just have not come to surface before now.
No, we reveal, for example, how American pension funds, was Pennsylvania, West Virginia, South Carolina, a few others, were investing on a vehicle through the Cayman Islands that was controlled by Glencore. And that vehicle was used to finance oil trade in Iraq, which has big political implications because it triggered a conflict between the Kurdistan region in the north and the central government in Baghdad. So that's one of the areas where you see, the traders having a political impact, but also engaging more and more with other investors, with institutional investors, even pension funds. And in many cases, regular people don't know even about their existence of their names.
What was the hardest thing to research, Javier? I know there's also a beautiful bit in the book where you basically, meet a trader or a senior executive who used to, I think, have like $500,000 in cash, literally just coming to London, possibly in a paper bag. Was that difficult, getting people to actually tell them, tell you maybe some of the bribes or some of the things they had to do to pay people off?
It was difficult to convince some of the people to talk. Tracing the history of the traders was very difficult. These companies don't usually like to talk a lot, and there are very few publicly accessible archives. You want to have the finance of these companies, you need to go to places like Cyprus and registries in Liechtenstein and Singapore, Dublin. So getting a lot of the financials was difficult, and then convincing everyone to speak and to convince them to speak on the record with their names was very difficult.
Do you think the industry has significantly changed because of renewables? So because they're no longer 100% the masters of the universe, will it lead to more transparency? Will it actually lead to, I guess, less, I don't know if it's corruption, but less paying offs for certain contracts?
I think that the industry has changed, and has changed quite a lot over the last 20 years. I mean, the wild days of Mad Rich, everything is possible, and we can trade with anyone that we want, whatever we want, are over. I think that the industry has changed, but there is still wrongdoing. We have seen recently some traders admitting to have paid bribes, as recently as about 6 months ago, for example. So there is still a spectrum for things that they are not correct. But I do think that climate change, as you say, is going to have an impact on the industry. We're going to see probably less coal trade. We're going to see probably less oil trade, but maybe open new opportunities. We're going to need new commodities to power a green economy. Think about cobalt for electric vehicles, batteries, or more electricity trading, because everything is going to be electric. That probably opens new opportunities to the commodity traders.
Javier, thanks so much. Javier Blas there, our chief energy correspondent, and Javier and Jack Farkey's book, The World for Sale, Money, Power, and the Traders Who Barter the Earth's Resources, now on sale actually from today, I think, and then in the U.S. from March the 1st. I bought like 10 copies. You know, it's a treat that the kids get once lockdown is over, Javier. Now, coming up, meme stock mania is back. GameStop surges in pre-market. What's to come in today's U.S. session? This is Bloomberg.
Let's just start with the numbers.
And it would be essentially free cash flow positive in 2021. That was sooner than people had been expecting.
We have pretty good numbers here in the biggest divisions of Morgan Stanley. They are firing on all cylinders.
We've had this huge rivalry historically between Morgan Stanley and Goldman Sachs.
There are 24 reasons for Mr. Diamond to celebrate today.
As much as people may want to focus on trading, for Bank of America, it's all about credit.
It seems the markets are very happy with Trump. They're very happy with Biden.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua here in London. Now let's get straight to the markets. Danny Berger looking at stocks gaining, bonds selling off, and I guess it's all about reflation on Powell. Although I want to talk about sandal makers in a second, so give me the lowdown on the markets first.
Yeah, there's a lot going on today, isn't there? Well, look, I think after Powell yesterday really saying that inflation is not a concern to him, that really gives everyone the light to go ahead and paint all risk markets green. We saw that in late trading in the U.S. We saw that in the Asia session. In Europe, things are certainly looking positive. I think, though, the interesting thing that starts to happen here is when you get this positive market reaction, what we're now starting to see in the U.S. is the big growth NASDAQ 100 futures sort of trade actually doesn't do well. You have this fear over higher yields, higher rates. What does that mean for the growth stocks? All of a sudden, does their valuation not make sense anymore? And I think that's part of the reaction we're seeing. And it is certainly a different environment because it used to be any support from the Fed is just positive for all stocks. Now we're starting to see more dispersion.
Danny, I'm a little bit obsessed with this Birkenstock story because they're now valued at over $4 billion, and you have private equity. I mean, there are a lot of people interested in actually buying, Birkenstock. We've had them for like the last 10 years. I don't understand these valuations. Is it because they go into other markets? Like, there's actually a fight about who could buy Birkenstock, the sandal maker.
Yeah, exactly. It's not just L Catterton, which is, of course, the private equity fund backed by LVMH. It's CVC, too. They're in a bit of a bidding war, though L Catterton looks to be the favorite. But, Francine, it is weird thinking $5 billion for Birkenstock. I definitely had a pair at one point. I have no idea where they are. But it also reminds me of looking at Doc Martin going public as well, and that stock doing really well. So I don't know if this is a nostalgia play or whatever, but part of it is, as you say, expanding into other markets. Birkenstock, with the funding, wants to go into China and Asia and some of the emerging markets. So I guess there is room to grow here.
Yeah, Danny, I think Tom Keane actually sent me a picture of Birkenstock, like alligator Birkenstock, that cost $800, which I didn't even know existed. And then we also have to talk about Panini, which, you know, we've lost half of the Americans because they haven't had Panini in their childhood, which is basically sticker books, usually to do with football. Danny's busy. She has so many stories that she's covering. Danny Berger there. Now, Bloomberg Surveillance Early Edition continues in the next hour with Kaylee and Matt. This is Bloomberg.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
There's a lot of slack in the labor market and a long way to go to maximum employment.
The WTO needs to be reformed and rebranded. Will it be easy? The answer is no.
I'm directing senior officials in my administration to work with industrial leaders to identify solutions to this semiconductor shortfall.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Well, good morning, everyone, from London, Berlin, and New York on this Thursday, February 25th. I'm Francine Lacqua with Matt Miller and Kaylee Lyons. Actually, so much going on. Matt, if you look at, I know we want to talk about Birkenstock, we want to talk about Panini, I know you want to talk about Aston Martin, but I think, you know, if you start with the reflation trade, what Powell was saying, and then we had that interesting note from JP Morgan about volatility, that's maybe a good way to start when looking at the markets this Thursday.
Yeah, absolutely. And I'm also focused on euro area economic confidence, just crossing the ticker right now. Higher, of course, 93.4 versus the estimate of 92.1. That's because it looks like we're going to get the vaccines faster. And I think this is really key because economic financial conditions in the U.S. are much better. Here in Europe, we need something to boost our economy if financial conditions can't be boosted by the ECB. So more vaccines, I think, is the answer for the European economy.
Yeah, Matt, on vaccines, I saw, you know, Moderna ready once it's approved to, I think, do around 1 billion doses in vaccines. There's a concern, at least for me, I read in the New York Times this morning that there's a variant that actually going around much faster than expected in New York City. So we'll have to look at that as well. Kaylee, what are you looking at in the markets?
Looking at a lot of fluctuation, Francine. We are definitely looking for direction, at least here in the U.S., with about 4.5 hours to go until the opening bell. Futures have been fluctuating between gains and losses for really the entire session. Right now, down about 0.1% on the S&P 500. Still, though, fractionally higher on the other side of the Atlantic over in Europe. Of course, a lot of the action has been in the bond market. A really rapid rise in yields. Sell-off in treasuries yesterday, spurred in part by that better vaccine news from Johnson & Johnson. The FDA report indicating that maybe it will, in fact, get authorization. Right now, the 10-year yield up nearly 6 basis points through 1.44%. That is the highest since February of last year. We, of course, also have to keep an eye on the commodity market as well. The other part of the reflation trade, Brent crude, is holding above $67 a barrel. And as far as pre-market movers go, one story that has come back to the forefront is the Reddit trader frenzy. Some of the former favorite stocks of late January surging once again. GameStop doubled in the Wednesday session, and in pre-market trading, it's up another 50%. Some of the other favorites as well, like AMC, Express, and cost, seeing nice moves in the big market, a 61% move in pre-market trading for cost. Matt, these Reddit traders are reminding us very clearly that they are still around and they are still a force in this market, Matt.
Yeah, absolutely. You know what? I'm focused on fiscal thrust when it comes to Europe versus the U.S. today. JP Morgan out with a chart that shows the boost from discretionary government spending minus the expiry of tax benefits and support measures. Here it is with the U.S. in blue and Europe in red. You can see this goes up to 2022. So that's the estimate. Right now in 2021, JP Morgan expects fiscal thrust will add 1.8% to U.S. output this year. It'll subtract 0.1%. But the interesting thing is then the U.S. falls behind of Europe because Europe is focused on these longer term measures like boosting infrastructure. And that's, I think, what the Biden White House is going to want to focus on next.
Yeah, I love that chart. You know, it also goes back, Matt, to the UK, the Chancellor of the Exchequer actually coming up with its budget next week and whether he'll put more stimulus on the table. Let's get straight to Christian Nolting, Chief Investment Officer and Head of Investment Solutions at Deutsche Bank International Private Bank. Christian, we need to talk about reflation, but also is the U.S. just powering ahead because of this extra stimulus, and does that leave European assets behind?
Well, I would say it's a massive stimulus that's probably to come, and there's a lot of discussion, is that too much kind of to be inflationary? And I think the chart you're showing is so important because if you evaluate markets over a little bit a longer time, you need to see, okay, there's a massive push right now, and what's the consequences for the coming years? And by the way, the same is true for Europe with this recovery fund. It's also coming over the next years, but there's also then in 2024 and 2025, if you just look at growth from that perspective, that turns negative because it's no longer coming. And then Europe has time to bring in productivity higher or not. And to answer your question, I think, yes, Europe can be cyclical in a reopening trade and probably more cyclical than the US. So there's some upside for that. However, from a growth perspective, and that's why the vaccine is so important, I agree with that, US will probably faster, UK will probably faster, and Europe will take much longer to reopen, and that will weigh on growth.
But do you buy any European assets because they're at discounts now, given the trajectory for vaccines, or do you wait, Christian?
No, we have done that. We do like a barbell strategy, is like tech on the one hand side still, which is more US tilted, as you know, and the cyclicals, we look into Europe for sure. We had one discussion though, normally one market which is very cyclical is Germany, obviously, but we think at this point in time, it's also interesting to look at Japan because of the proximity to the Asian growth. So we favor a little bit Japan over Germany, which we have not done for quite some time, to be very honest.
I wonder if the weakness in European banks worries you compared to the strength, Christian, of US banks.
Well, we see also banks coming back a little bit in Europe. But again, if you compare financials, they of course link to yields, and you see the rise in yields happening everywhere, but in the US it's faster. And that's why you see still some outperformance. But I think there's also potential for the European banks, but that's a still high correlation, and I don't think that will change to the yield environment we are in. And again, here I expect 10-year treasuries or treasury yields to be faster than in Europe because of the lower growth.
We have, Christian, seen rising interest rates help net interest margins in U.S. banks. We've seen rising volatility, I think, cement expectations for even more trading gains from banks. I have a chart here showing the XLF. So this is U.S. banks. They've really outperformed, especially year to date. This is over the U.S. 10-year, but you can see at the bottom of this chart as well, they're pretty overbought. Do you expect U.S. banks to keep on this record pace run?
Well, again, as I said, look, it's for trading, it's important to have volatility in the market. I wouldn't be surprised if volatility stays high or even climbs a bit higher, so that would be positive. But then I think the linkage, as I mentioned, to interest rates is very, very important, the steepness of the curve. And from that perspective, I wouldn't be surprised if, say, in the second half of the year, there's some setback, because if you look at the environment, we probably see some inflation expectations and inflation itself rising in the first half of the year. And for some countries, there would be like a 3 handle, could be, which is probably a surprise to many. But then in the second half, this should go down because, as Paul yesterday said, we don't think people would go on strike for higher wages because, literally not everywhere, because the labor market, the unemployment numbers are still quite high. It's not at full employment at this point in time.
You mentioned Jerome Powell, and in his testimony, he also made it pretty clear he's not too concerned with the sell-off in the bond market or where yields are right now. But at what point do you think the Fed is not going to have a choice but to pay more attention to that market if it does indeed tighten financial conditions? Because we know the ECB is paying attention.
Well, the Fed for sure is also paying attention. I think it's a question of speed. If it's going slowly up, then probably it's fine. Still, I think if we cross, say, at the 10 years, the 2-year handle, that would be concerning to them. But if it's going fast, then of course the Fed will think of maybe yield curve control or measures they can take really to stop that a little bit. And I think that's where everyone in the market is waiting for. And that is creating a little bit complacency in the market. And that's something really to watch for this year as well.
Christian, I spoke to a portfolio manager 20 minutes ago who told me actually it's the time to go into travel stocks. I think he was quite bullish on airlines, and he's even buying cruise ships. Is that, what kind of risk appetite do you need to have to go into it now?
Well, I think we see a massive uptick, of course, in travel because you talk about the opening of the economy. If you want to be so specific to go on cruise ships, I think then you need to have really good testing capacities available, because if you go around the world, we are probably not very early in a stage where everyone in the globe is being vaccinated. So I think going back to 100% is probably a too early call from my point of view. So that's quite a brave move, I would say. Well, you can do that with a high beta to the market. But again, I would say we rather do that barbell strategy of tech and cyclicals. That's where I feel more comfortable.
Yeah, I thought it was a brave move too, Christian. I don't know what the uptake for cruises at the moment is, but we'll dig a little deeper into that. Christian Nolting from Deutsche Bank stays with us. Now, coming up a little bit later in the program, we talk about e-commerce, and specifically e-commerce in Africa. Can they take on Alibaba? Can they take on other companies, including Amazon? Sasha Ponyanek, Jumia co-chief executive, joins us. And then a little bit later, the World Bank president, David Malpass. That's an interesting conversation about politics, dynamics, and of course, equality or inequality rising across the world. That interview, 8 a.m. in New York, 1 p.m. in London, and this is Bloomberg.
feel we have a very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast, and it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being in almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua in London and Matt Miller in Berlin. Well, guys, I am focusing on commodities this morning because Brent crude is higher for the fourth day in a row. It's up about 7% over the course of the last 4 sessions and is holding above $67 a barrel. Some market watchers now saying that $100 a barrel could be in focus again in the longer term. And this is really all about a tightening global market. Global oil production falling to 10 million barrels per day this week. Part of that is due to the deep freeze that happened in the U.S. You also have European stockpiles falling, and then OPEC, of course, is still keeping a lid on production. So that has led to a hot rally in the oil market. Of course, the demand picture improving as well. And that isn't just specific to oil. It really has been the broader commodity complex. Copper approaching $9,500 a ton. It's really a broad industrial metals rally. Everything from softs like corn to any commodity basically you can think of has been moving higher over the month of February. In the month of February so far, the Bloomberg Commodity Index is up more than 9%, which is the best monthly performance in a decade, going all the way back to December of 2010. The question is, does a commodity rally this hot bode well for other asset classes? Mark Cudmore on our Bloomberg Live column said, it may not. If you look at commodity rallies with this velocity looking out over the course of history, they are usually followed by a slump in the S&P 500, Francine.
Kaylee, thanks so much. Still with us, Christian Nolting from Deutsche Bank. Christian, I know you love looking at charts and also looking at some of the things that we are showing our viewers. Do you buy any commodities right now, or does it look too volatile, given it's just on vaccines and actually how quickly we can reopen?
No, we have increased commodities like a month ago. We had already some exposure, as I mentioned, not to gold, but really to the industrial metals. I think there's some more upside, but I have to admit that's a tremendous rally. So again, don't want to be too complacent, but I think, it's the reopening trade. And from that perspective, there's a lot of pent-up demand. And I think that explains the rally, which admittedly is a quite strong one,
Christian, is this on supply shortages? So if you look at copper, there's, do you go into commodities with a specific story, or do you just buy, the whole thing?
No, I think it's interesting. We had discussions also, if you look, for example, at energy, valuations also look quite attractive. But there is ESG as a main topic. So do we want to go overweight? We said no, because investors probably shy away from this because of ESG regulation kicking in. And I think that's interesting because the first time we really don't do that because of ESG. And I think that's also a major topic. And that's why we go more into the industrial metals than into the energy complex, for example.
Does the rise in commodity prices concern you when you are thinking about other assets? Kaylee was just talking about Mark Cudmore's point on the MLive blog. We've got a chart to show the BCOM, Bloomberg Commodities Index, going all the way back to the 1970s. This chart is as old as I am. And every time commodities rises, the S&P gets punished. Now you can see a breakaway gap there at the end. Isn't that a warning for U.S. stocks?
Yeah, first of all, we are obviously roughly of the same age. That's interesting. So, but I think, yeah, look, if it turns out to be inflationary, if it rises with that, and clearly I think there's a correlation into inflation expectations, then it's an issue for real yields. And that, I think, is the correlation to equities. So again, as with yields, if that's going like this and it's going faster and faster, that's a concern for the market, for sure, yeah.
It must be partly the inflation that spurs the Fed to raise rates, right, Christian? Because, you know, we heard Powell the last couple of days saying it's only transitory, but I can't imagine copper prices will go down, tin prices will go down, lumber prices will go down, especially with infrastructure pushes around the world.
Well, there's all the fiscal programs are also linked to infrastructure, right? And here you also have a reopening trade, and a lot of investments from there will go there, and then you need copper, etc. I think that's one reason, not only pent-up demand, but also looking forward to more fiscal programs to come. Yeah, and that's, I think, the danger, that eventually is more inflationary than central banks think at this point in time. And what I mentioned before, if you are like in June, July, and inflation expectations and real inflation is higher, there might be a tremendous discussion about this. And maybe then yes, in the second half it's transitory, but it could cause, from my point of view, volatility in the first half.
Christian, what technology stocks are in a bubble right now?
Well, I think what we need to look at in the technology space, where are really technology companies which have solid returns, solid earnings, and I think there is more upside to this because of growth. And they need to have the pricing power on the platform. If that's not the case, maybe then parts of technology is in a bubble, but we still think you can buy into technology if you look at this, let's say, preconditions. But again, for the whole portfolio, we are saying technology in the one hand side, but then cyclicals, value on the other hand side as a barbell strategy. I think that makes more sense. To really go massively overweight on technology with also rising yields, which normally is not the best environment for them, I wouldn't do that. So we keep the technology stocks we have. I think they're well positioned, but I wouldn't go overweight from here.
Christian, Credit Suisse was just, one of the latest banks saying they hope to bring workers back in the office because this fatigue and Zoom calls and things like that are mounting. We heard it also from the U.S. banks. Does it mean that you would actually buy into
Goldman Sachs as well, right? David Solomon really wants people back in the office.
Yeah, and J.P. Morgan.
Yeah, look, I think what's important is probably different where you are in the world, right? So as you have different, let's say, pace of vaccination, that's something you need to take into account. I think you cannot endanger people to just go to the office because you say you want that. I think that doesn't make sense. And different parts are at a different speed, obviously. So where I'm in Germany, European Union is slower than the UK, the US. And so there will be different speeds of also in the way going back to the office. But indeed, people want to go back to the office, maybe not the whole week, but of course, if you are able to meet and talk, I think that's the human being. You want to do that after such a long period of time, including myself. But I think we have to watch what the governments are saying. Is it safe? And do we want to do that? And again, that's very different globally. And that has consequences for macro growth. US will be faster than the EU. We have upgraded the US. We have downgraded EU growth because of that. So news on vaccination, which is positive, is a good one.
Thank you so much. Christian Nolting there, Chief Investment Officer and Head of Investment Solutions at Deutsche Bank International Private Bank, the same age as Matt Miller, and both very handsome. Now, coming up later today, we hear from the key players in the cryptocurrency market at the Bloomberg Live Future of Cryptocurrencies event. Set to speak, ARC's Kathy Wood and Silver Lake's Glenn Hutchins. This is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kaylee Lines in New York. Let's get to the first word news for you from the Bloomberg terminal. Public health experts say a new study shows immunizations could end the coronavirus pandemic. Well, I thought that was the idea to begin with. In any case, the study published in the New England Journal of Medicine found that the Pfizer-BioNTech vaccine was overwhelmingly effective against the virus. Researchers followed nearly 1.2 million people in Israel, and the efficacy was more than 94% after 2 shots. Questions are being raised about the infrastructure Americans rely on to process payments. For about 4 hours yesterday, Federal Reserve systems that execute millions of financial transactions a day were disrupted. It appears to have been some sort of internal glitch. The system processes everything from payroll to tax refunds to interbank transfers. Maybe they should use the blockchain instead. Luxury car maker Aston Martin will almost double production this year. The British company plans to make 6,000 vehicles in 2021. Aston Martin also reported quarterly revenue and earnings that beat estimates. The car maker cited strong demand for its DBX sports utility vehicle. I'm normally not a fan of these smaller SUVs, Francine, but this one is quite sexy. When we get an exterior shot, the steering wheel and the headlight looks good too, but the whole vehicle is pretty amazing. And I think James Bond might drive one in Phoebe Waller-Bridge's new 007 movie.
Yeah, the 007 movie that we've been waiting for about 18 months. I feel like I've heard, I listen to the songs like every week, but actually we haven't seen the movie. Matt, I love doing the show with you because I have, little interest in cars, and then I hear you talk about it in the morning and I get so excited. I can't believe Aston Martin only made 3,000 cars last year and they had an inventory problem. Like, are you not Aston Martin?
Well, Ferrari only makes like 10,000 units a year, and that stock trades at like 20 times earnings. That's the kind of thing that Aston Martin wants. Frankly, that's the kind of thing that Porsche wants if VW spins them off.
Yeah, and of course, it's not just about SUVs for Aston Martin either. They're looking toward EVs, as everyone is. But now I'm just thinking about who the next James Bond is going to be, because this is Daniel Craig's last movie. We should take a poll. We should put it out on Twitter, Francine.
Oh, he's the best Bond. He's the best
I would
Bond,
agree with
I
you
think.
that there has to be someone after him.
Yeah.
Debatable.
He's better than Sean Connery and Roger Moore.
Sean Connery. We also need to talk about Birkenstock, but first we need to talk about the meme stock mania as well. We discussed the surge in GameStop and other day trader favorites, and yes, we'll have plenty more on 007 because it's kind of the zeitgeist for 2021. This is Bloomberg.
What's the biggest mistake you made when you were a fresh MBA grad and looking for a job?
Make sure you try to do something that you're interested in and that you think you'll be good at. I just was on a path to law school, and I actually never asked myself why I wanted to go to law school. And I randomly went to an investment banking analyst recruiting event, and I figured out I had an aptitude for it. I was interested in the work. If you're not interested in it, and it's not something you're good at, the money will not justify it. I also think that there's nothing wrong with experimenting. Doing something that you always thought you might want to do, trying it for a couple of years, you can then go back down a traditional path if that's what you want to do. Try to remember what you want out of a job, where you want to live, what you want to get from it, from personal experiences, from development, from training, from fulfillment, from engagement in the community, and make sure you think about those things up front as you're recruiting and not try to evaluate it after you got there.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance, the early edition, and here are some of our top stories. While meme stock mania returns, GameStop shares jump 104% in Wednesday's cash session, dragging a host of other retail favorites higher. Pre-market, I think it's gaining some 72%. Powell sticks to the script. The Fed chair's pledge of prolonged support see bonds sell off and stocks rally. Commodities are set for their best monthly run in 4 decades. And family brand buyouts LVMH-backed private equity house L. Catterton is near a deal to buy Birkenstock for €4 billion. The Italian football sticker maker Panini is also considering a sale. Well, live from London, Berlin, and New York, I'm Francine Lacroix with Matt Miller and Kaylee Lyons. There's so much going on. Matt, I know you want to talk about Aston Martin. We did it in the last hour, but actually Birkenstock valued at $4 billion. I feel like in the market frenzy or the reflation trade overall, as many companies as possible are either trying to go to market or if you're a family-owned business, trying to sell it off.
It's, the weird thing is, is this a play for boomers, right? My parents wore Birkenstocks when they went to Woodstock and marched on Washington in the 60s. I guess the kids think things are cool now that were cool then, and that's normal. I get Doc Martens makes sense because that was like the 90s, but Birkenstocks was a long time ago. Is that really back in?
I think it is, yeah, and the slides are back in, the plastic slides. We'll talk e-commerce and fashion on Bloomberg Surveillance, the early edition.
You know what else is back in is like flare pants. Talk about the 70s. Apparently skinny jeans are dead to millennials.
Bell bottoms?
Bell bottoms, yes. That, of course, is what they're called, Matt. Those are back in fashion.
Bell bottom blues.
Uh-oh, Matt's singing. We should probably just go ahead and check on the markets now. I think it's
Kaylee should
probably time to do that.
Eric Clapton.
Yes, well, it was a lovely rendition, Matt. Okay, talking about futures, though, about 4 hours to go ahead of the U.S. Open. We're roughly flat on S&P 500 futures, but again, your underperformance is going to be coming from large cap tech. The NASDAQ 100 futures pointing lower by about 0.6%, still trying to navigate the higher yield environment. We've talked so much about the selling in duration on the longer end of the curve, but I actually want to talk about the belly of the curve, the 5-year, because the Treasury auctioned off $61 billion worth of 5-year notes yesterday. Not great demand, the second lowest bid to cover ratio within the last decade. So that is leading to some selling in the belly, up 6 basis points to just about 0.66%. And of course, this is the part of the curve we watch closely for expectations around the Fed. Also, we have to talk about Bitcoin, or at least get a check on it, up about 0.8%, sitting just below 50,000. That really seems to be the threshold for which everyone is watching Bitcoin at this point. Another story tied to Bitcoin we have been closely watching this week is what's happening with ARK Invest and with Tesla. In the pre-market, both the ARK Innovation ETF, that's Cathie Wood's flagship fund, and Tesla are lower to the tune of about 1%. Of course, with Tesla, some idiosyncratic factors there as well. The company reportedly is idling production on its Model 3 line in Fremont, California for at least a temporary period. I also wanted to check on NVIDIA, lower by about 2% in pre-market trading after results after the bell. The concern there is about growth in its data center business. One stock moving to the upside to the tune of about 10% this morning, though, Sundial. And that is all about Reddit favorites renewing their focus in this market, and that is getting a nice lift in the pre-market off the back of that frenzy, Matt.
All right, just want to point out, Cathie Wood told Carol Massar, I think it was 2 days ago, that she bought another 240,000 shares of Tesla. So that's really interesting that they're both down again after a bounce yesterday. I've got a chart here showing historical correlations between European and U.S. financial conditions. Europe, I had Hillary making the blue since that's the color of the EU, and U.S. in the white. Now, this is Goldman Sachs' read on financial conditions. So lower is better, and you can see that the Fed seems to be doing a much better job than the ECB, although really, I guess it's the vaccine that's a huge part of it as well. Francine?
Yeah, now meme stock mania is also back. GameStop continues its resurgence in U.S. pre-market trade. This after more than doubling on Wednesday in a move that spread to a host of other meme stocks at the center of last month's, of course, day trade-driven frenzy. And joining us now is Bloomberg's MLive, Eddie van der Veld. Eddie, when you look at some of the games, I think there's an emoji of a frog, apparently, that if it shows up on Reddit, people actually go in and buy it. Where does this continue? Where does it go next? It means they're alive and kicking.
Yeah, absolutely. Listen, I had a look in on Wall Street Bets on Reddit this morning, and absolutely, it's all about GameStop at the moment. People are really getting excited about it again. It feels like, you know, there's momentum building. There was a little bit of a period where we had that silver squeeze, and we had kind of a split opinion coming in on that forum. But now it seems like, you know, the momentum's all shifting back behind GameStop, and I think that's where they're focusing. You were talking about fashion earlier, and you know what? One thing that I'm waiting to see a comeback of is the mullet, because of course the mullet is all business at the front and party at the back, and that's what we're seeing in the that's what we're seeing in the yield curve. I shamelessly stole that from Twitter, but listen, that's what we're seeing in the yield curve. The yield curve at the go on.
Short in the front, long in the back. Is that what you're going to say about the yield curve? The 530 is what they call that.
That's exactly
5 centimeters in the front, 30 in the back.
That's exactly it. The yield curve. This is where we're seeing it, and we're starting to see just you know, sort of hints of a taper tantrum. So these meme stocks can do really well while conditions are good. The question is whether that continues into into the middle of the year, later in the year, as we start to see fears of tapering come in.
I can assure you that the mullet is already back strong in Berlin. And to add to the ridiculousness of the look, Berliners wear fanny packs or bum bags, like people who weren't so cool did back
Matt,
in the 90s as well. I want to show you.
I've given my kids
I want to show you a
not on purpose.
Well,
Lockdown.
maybe I just don't know what's cool. I have a chart that's very cool, and Eddie, I think you're going to like this. Well, hopefully all of you will. It is 1090 in the terminal, and this is trading frenzy. It shows you that meme mania is back. You can see in the white here, U.S. total exchange volume. It's a 20-day average. The interesting thing is Deutsche Bank came out with a note and said they think $170 billion of the forthcoming stimmies are going to go into the stock market directly. So they did a survey. Americans want to put 37% of their $465 billion in stimulus checks directly into the stock market. What do you think about that?
Yeah, I think absolutely. I think that, a lot of this rally has been driven by people bored at home, some money coming in and speculating. We've definitely seen that across social media, people talking about it. But here's something really interesting that colleague Laura Cooper did this morning, was she considered meme stocks as a factor of investing. If you can look at thematic investing, and you can say, look, I want to look at this as a factor of investing, the same way I would use small caps or momentum or something else. Then I could isolate it and I could play it directly, and then I could try and look for the drivers, the underlying drivers. For instance, the as you say, stimulus checks, and I can say, okay, I want to go long with this factor or short this factor. I think it's a brilliant idea.
Eddie, thank you so much. Eddie, what's the frog meme, or actually the frog emoji? Does it mean buy or sell on Reddit? We need to look into. We need to look into that. This is what I'm hearing, but it's the young kids. Eddie van der Walt there. Everything you need to know, of course, about GameStop and Bitcoin. Now, coming up next, Sasha Ponyanek, the Jumia co-chief executive. This is a conversation on e-commerce in Africa. This is Bloomberg.
Nuestro país, igual que los demás países del mundo, no está preparado para esta pandemia. Más aún, los más afectados son los países de desarrollo como el nuestro, ¿no?
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into this SPAC thing a little bit before it became such a hot method of going public.
This is Bloomberg Surveillance Early Edition. I am Kaylee Lines in New York with Francine Lacqua in London and Matt Miller in Berlin. Now let's take a look at the stock of Jumia, which is an African-focused e-commerce company, often called the Amazon of Africa. It operates on the continent, even though it is based in Berlin, but it operates in about 11 countries, representing 70% of Africa's GDP. It operates a marketplace, a logistics business, and a payment service as well. Now, the stock ADR is listed in the U.S. back in 2019, and just over the course of the past year is up 1,200%. Now, a lot of this was on expectation that as an e-commerce company, the pandemic was going to benefit it in a stay-at-home world. But Africa hasn't seen lockdowns of the same extent we've seen in much of the rest of the world. So that demand boom was not as robust. That led to a bit of a disappointment in its third quarter results. But Africa is a big growth opportunity. It is a market that other e-commerce giants like Amazon and Alibaba have proved reluctant to expand into. And of course, it is the second largest growing economy in the world, second to East Asia. And right now, e-commerce only has about 1% penetration relative to 20% in the likes of China. But in Africa, there are inherent issues to deal with as well, one of them being internet access. Only about half of the continent has reliable access to internet, and there's also infrastructure and logistic issues that make deliveries a bit difficult. For Jumia specifically, the big issue is the path to profitability. In the fourth quarter, revenue did top expectations, but they still reported an adjusted EBITDA loss of 28.3 million euros. Granted, that is down 47% on a year-on-year basis, but still a bigger loss than maybe investors are looking for. It is that path to profitability that is going to be a key question for investors going forward, though in the fourth quarter and in 2020, the company did see some improvement on that metric, Francine.
So we have the man in charge to talk about results, to talk about the strategy forward and everything like that. Sacha Poignonnec, the Jumia co-chief executive and co-founder, joins us now. Thank you so much for joining us. There was a nice little roundup of actually some of the challenges and opportunities for Jumia. Sacha, are you focusing actually on just getting market share right now, or do you need to focus on margins and profitability?
We're focusing, I would say, and good morning. Thanks for having me. It's a pleasure. I think the summary was very good, by the way, and a very good introduction. I think we're focusing on building a very sustainable platform because, as you said it in the summary, this market is ahead of us. This opportunity, this huge opportunity is ahead of us. And so we've been very focused over the last few years in building what we see as a very sustainable platform, which works very well, which is going to scale very well, and which is going to be financially attractive also with, as you say, a clear path to profitability. And that's what we are focusing on right now, to work both on building the infrastructure for e-commerce to scale very well with attractive economics. And I think that's really what we're focusing on right now.
Sacha, when you look at the business case for it, so you have some really impressive numbers on how much e-commerce and internet sales will grow in Africa. How much will the pandemic actually affect that? How much does it mean that this will be delayed by 2-3 years unless we get viable vaccines also in Africa?
Yeah, it's, I want to think that e-commerce is still, I would say, as you say, 1% of the sales. So in some way, we are not as impacted as the rest of the economy by the macro changes. Definitely, I think the pandemic is weighing on the consumer, spending power and morale. And I think it's creating a lot of uncertainty for the economies in general and for the population. At the same time, consumers are also looking for opportunities to save money. And part of, I think, what will be the success of e-commerce in Africa is that we are distributing products between the sellers and the consumers in a very efficient way. And, often the prices on Jumia are cheaper than the prices in the offline world. So I think if consumers are looking for value, they should turn to online. They will be more picky, and they will, when they go online, find that Jumia is cheaper and Jumia is very attractive. So I think, in a way, we'll see what happens.
How quickly is those consumers' access growing, Sacha, to get online in Africa? How high is the take-up rate?
Yeah, I think I often say that internet access for us is really sort of something we don't really worry about, because in the markets that we operate, we have about 600 million people, and about 400 million of those people are already online. And if you look at the data we published yesterday, we had in the last 12 months million or almost 7 million consumers buying on Jumia. So if you think about it, yes, of course, penetration of internet will go from, 50, 60, 70, 80%. But for us in the e-commerce, we still have hundreds of millions of consumers to, go after and convince them that they can transact
What about
online.
delivering, Sasha? It was tough for Bill Gates to get the polio vaccine around there because it's dangerous. What about delivering your goods?
Well, we have, a very efficient logistic platform, which we think is, by the way, a unique asset. We are now starting to monetize this to third parties, and we are delivering millions of packages across 11 countries. And we have published data that shows that, the majority of our packages are going outside the big cities. And we've developed a very efficient network of partners that we work with. We have door delivery in home delivery, but we have also a network of pickup stations. And it's all about, the operating model, and it's all about ensuring that the drivers, we work with partners who know the local areas, etc. So I think we've managed to build this platform thanks to technology and a lot of integration with local partners and local specificities. And it's working very well. It's working very well. It's one of the biggest assets we have, actually.
Well, on that point, Sasha, you have that logistics business, you also have the payment service, and you've talked about in the longer term spinning both of those off. At what point would that happen, and why do that if you see them as growth drivers?
Yeah, and we've mentioned that as a very long-term opportunity, because obviously we think that payment and logistics today, they're part of our infrastructure, but they are businesses which are inherently different from operating a marketplace. In the same way, eBay and PayPal, at some point, the destinies, of the two had to be separated. This is something that we are building those assets with the possibility to do that in the long term. This is something that is not meant to happen within many, many years from now, right? Because today, the fact that those assets are together makes them much stronger. But in the future, we're building with this in mind. But again, we're talking years and years and years from now. For now, the goal is to really grow e-commerce and make the best of this asset combination. And then one day, maybe in years from now, we want to carve one of them out.
And I know you also see opportunities in gaming and video streaming, which is frankly a little bit of the Amazon, business model. Why is Amazon not more aggressive in competing with you in Africa?
Well, it's always hard to speak for the strategies of the others, but I think Africa is definitely a very unique continent for the challenges that it presents. And those challenges, I think we have embraced them as opportunities. But when you are, a US-based company or a European-based company or, not operating in Africa, I can understand also why you would say, look, Jumia had 7 million consumers over the last 12 months, and look at how much work that takes and how much passion and how much local adaptation it requires. And so for players who are not, focused on that, I can understand why for them it's something which, they would not prioritize. And I think, it's just the way it is.
Watch out for GameStop. Sasha, GameStop looking to expand in Africa. Be careful there.
Look, gaming, we're not operating like a gaming platform. We are distributing some games, actually. And we have a lot of gaming companies who are coming to us and actually want to partner on Jumia Pay, because a lot of the gamers in Africa cannot pay on those platforms. So, if GameStops want to distribute some games and use or leverage Jumia Pay and Jumia for that, we are, at the end of the day, we are happy to partner with gaming editors to help them distribute their products and their games to Africa and grow their communities.
Yeah, it's probably an ecosystem that's needed. Sasha, thanks so much. Sasha Ponyanek there, the Jumia co-chief executive and co-founder, joining us this morning. Now, coming up shortly, more from our interview with the incoming WTO Director General, Ngozi Okonjo-Iweala. This is Bloomberg.
now are going to be about half the size of the existing solar arrays that we have on the International Space Station. But because of the advances in technology over the years, they're going to provide about twice the power in just half of the area that the existing solar arrays cover.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Well, the World Trade Organization has selected Ngozi Okonjo-Iweala to be the first woman and the first African as its leader. During her campaign, she called on nations to end export restrictions on vaccines to combat the COVID-19 pandemic. Now, in an exclusive interview, the incoming WTO Director General discussed the impact of the global pandemic on trade and poverty.
I think that the pandemic has underlined and exacerbated some trends that were there before the pandemic. And you've seen this pandemic has made us see clearly how inequality and marginalization within countries and between countries is a serious factor. I think that post-pandemic, we're going to see that many countries would have lost a lot of economic growth and output. I mean, some poor countries will lose even decades of growth. We'll see poverty increase. And within countries, even in the United States, you see some populations that are more marginalized. They are dying faster. They don't have the economic means. So post-pandemic, I think we need to focus, even now during the pandemic, we need to focus very hard on how can these the living standards and circumstances of those who are marginalized be better, so that we can help curb inequality. And trade can play a very strong role in that. First of all, trade can play a strong role in lifting barriers and export restrictions so that there's a free flow of goods, even medical supplies and vaccines, and we don't have supply chain problems, so we can save lives. Secondly, with respect to the economy, trade can also play a role. We should look for areas where we can liberalize, encourage more free flow of goods, whilst at the same time helping countries that want to set up some of their own industries and exports to be able to build that. I think we can do both. It's not one or the other.
Our exclusive interview there with the incoming WTO Director General, Ngozi Okonjo-Iweala. Now, it's that time of the day where Tom Keene, co-anchor of Bloomberg Surveillance, joins us to talk about the program, to talk about what he's looking at in the markets. And Tom, I'm a little disappointed you want to look at the Bloomberg Commodity Index and not Birkenstock, because there's a bidding war for Birkenstock, but you're focused on the dollar index and commodities.
There's different dysfunctions out there, including Birkenstocks, but the big dysfunction right now are these markets, Francine. They're really, really interesting, including a 10-year yield out 5 basis points to a 143. I'm looking at commodities, and of course, I know Matt Miller's beat this to death this morning. The Bloomberg Commodity Index had long-term disinflation, I guess I would call it, or even deflation. And the new leg up, is it a breakout? And we see more of that. The key thing for me is the bet on global resurgence, Francine, is the idea of what the softs are doing. We're talking the metals, we're talking copper, we're talking oil. We're not talking the corn, wheat, cotton. Cotton is up as well.
Tom, are you doing anything on Charlie Munger? I mean, he was, he didn't pull any punches. He kind of said, actually, what's happening with Robinhood and the likes, it's not only gambling, it's a disservice to humanity.
It is in the zeitgeist, and what I would go to is a crypto conference today, which I think is going to be lights out, extremely well timed. We've got Anthony Cosenzi of PIMCO and a number of others as well.
Yeah, I'll look at that. So, Tom Keene, this is Bloomberg.